Yeah, tell us why you're so bullish.
I suppose you're talking about Hong Kong.
Yep.
So first of all, I want to remind everyone about some of the fundamental advantages of Hong Kong. So Hong Kong is the only territory in China which is operating on a one country, two system framework. It's also the only place in China which uses English law as is a prevailing law. It's also only place using English language is the prevailing business language. But most importantly, it has the lowest tax regime in China, and also is the freest in terms of transaction of money within China as well. Capital once it's in Hong Kong can go anywhere in the world within seconds. And just another reminder is the RMB is still not a convertible currency. So all of this gives a very strong advantage to Hong Kong as the financial center of China. And you can witness that from the barrage of IPO last year in Hong Kong. And also these factors pretty much make it Hong Kong very attractive for the biggest Chinese corporations and also the wealthiest people in China to park their money in Hong Kong. I just read an interesting report, actually. I didn't know about this until a few days ago, that Hong Kong actually now has the second largest pile of offshore wealth in the world as a territory, second only to Switzerland. And it's growing at a rate that is going to surpass Switzerland within a few years' time. I think these are like kind of known facts, but not a lot of people talk about it. So I just want to remind everyone about the fundamental advantage.
And thank you for doing that, because it's also a reminder that these are conditions that apply not just to you guys, but to all players out there. And clearly, you guys are coming in. There are sellers out there. I'm wondering, with the amount that you've spent, is that a function of the presence of distressed sellers in terms of what assets specifically are you looking at, and why do you see that other people don't?
Well, I guess I would say maybe distress is a strong word, because it's not really that much distress yet in Hong Kong, given the low interest rate. But some special situations, right? The biggest acquisition we did last year was City Plaza 1. It's a major office building in Island East. We bought it from the biggest landlord there, Spire Properties. It's a special situation where we can buy at a price which is about 20% discount to what we paid also in a similar district only 2 years ago. And also we particularly like that district because this is the Island East district of Hong Kong, which really benefited a lot from the improvement in infrastructure. There's this Wan Chai to Central Bypass Tunnel, which was opened in 2018. It cut the traffic time between Island East to Central CBD from, in the past during the daytime, it's more like a 30-minute commute, and now it's 10 minutes. So it's really a paradigm shift in terms of infrastructure. And also it's a district which already has the lowest vacancy rate in Hong Kong. And it has a very big gap in terms of rental rates between there and Central. So we see a lot of.
Kenneth, office rents were down about 26% in the month of April in Hong Kong. Obviously, there's a big discussion about work from home and how permanent that will be, and which businesses are moving towards a bit of a mix when it comes to work from home versus being in the office. What is your view on that, and why is office space still appealing?
So I think, obviously a lot of, some of these larger corporations will be experimenting with work from home even after the pandemic, especially more like flexible work from home, some days in the office, some days in at home. But I believe that ultimately the human nature will prevail. If you are a good company with a good a good working environment, you're going to attract the type of employees who want to be in the office interacting with other smart people. And more importantly, they want to be there showing to their bosses how hard they're working, what type of leadership qualities that they have, which will be difficult to show, right, in the work from home environment. And conversely, if you are a bad company with a poor working environment, you will be attracting employees who would rather work from home. And that's why you have companies still using time card system where people have to punch in and show you how many hours they work in the office. I don't think those particular companies would want their employees to be working from home. And ultimately, people are spending more time in the office. Human nature, right? You're the boss. You're going to see them more. You're going to hand them the better projects. They will end up getting promoted faster. They will end up getting more bonus. So I think, give it 3 to 5 years, probably 90%
Okay.
is normal. Yeah, especially in a
Okay,
place like Hong Kong where the living environment is pretty crap, right? So I don't
Well,
see that.
that is true. That is true. Tell us about rental rates. Have they bottomed out in Hong Kong?
I am not sure whether it's bottom, but I think we are near to the bottom. The most important thing is when the travel would start again we become normalized again between Hong Kong and China. I think once that happens, you will see the bottom of the rental rates. In the last month, we already actually saw the bottoming out of vacancy with actually an increase in occupancy. So when that happens, usually it's a sign that rental is about to bottom out.
That's good to know. Yeah, we'd be watching that. Apart from Hong Kong, is there any other specific place that you're looking at?
Sure. Actually, we invest across the globe and also the rest of Asia. I would say, obviously, we're very keen on the mega trend, which is the growing middle class spending across Asia, but in particularly in China, which has really the domestic consumption there has been really accelerated by COVID, and also especially driven by technology. So some of the themes that we have been investing in the past few years, like data centers, like logistics warehouse, we've done a lot of that in China, and we continue to like that. And in terms of newer sectors, we also like real estate which are related to healthcare and real estate which is related to education. And another sector that we have been doing a lot in China has been luxury outlet malls, designer outlet malls, which we are involved in one of the largest, in fact, the largest outlet mall platform in China, and that's continuing to grow. And that is taking advantage of the growth in domestic consumption and also tourism. Other markets in Asia, we like, in Southeast Asia, we like Vietnam. This country has the highest economic growth rate in Southeast Asia. It has a young and educated, well-educated workforce. And also it is the prime beneficiary from the US-China trade war. We have been investing a lot in industrials there. We've been building ready-built factories. And even to my surprise, some of these ready-built factories that in fact, all of them that we have built in the last 12 months, even during COVID lockdown, has been leased out even before they completed. So witnessing how much industrial demand in that country. Other places we like Japan. With low interest rate, we continue to like the leveraged yield, cash-on-cash yield, which is one of the highest in terms of leveraged cash flow yield in the world, in terms of the major markets. And in particular, we like multifamily residential, which has very stable income, and also major offices in tier 1 cities like Tokyo, Osaka, Yokohama, these kind of cities.